Good morning, everybody. Welcome to MarketStream.live. This is May 9th, 2017. My name is Joe Cusick, if you don't already know me, and I work with the Cusick Group, securities offered by MoneyBlock. And I also give you insights here at MarketStream.live on what's going on. And we're going to take a look at the U.S. markets. The open is happening, and you see that the markets are in the green right now. The Dow Jones is up 16 points. That's good for basically a flatline open at 21,028. And, again, I think the major indices, the Dow Jones, the S&P 500, up 2 points at 2,401 over that 2,400 mark. The NASDAQ 100, that's what I watch. You can watch the composite as well. That's at the up 14 at 5673. And the Russell 2000 is up 250 at 1394.13. Now the story really is coming in after yesterday, seeing multiple highs on the NASDAQ and on the S&Ps. You look at this and you go, okay, but what's the story to be told here? Well, one of them is that we've had great earnings. You see that they continue to challenge the upside, but every time we see moves to this upside, I'm seeing, for example, yesterday, new all-time highs, but they're breaking records on low volume. You actually saw yesterday that if you looked at the advancers versus the decliners were actually winning. And you see volatility at a 23-year low. Last time I saw volatility this low was in December of 1993. Okay, that was a good year. Final year of school was going down to the floor, the Chicago Board of Trade. But with that being said, you're seeing that the market, while having some good earnings numbers, some solid economic data, both here in the States and globally, there's not that conviction. We're not seeing the volume. We're not seeing more advancers. We're seeing a market that's being propped up by now the new favorite group of stocks by Berkshire Hathaway, the FANGs. Facebook, Apple, Netflix, Google. Okay, and Apple was the driver yesterday, up 2.4%. As a matter of fact, if we take a look at Apple right now, you can see that Apple right now is up, I think, 0.4%, actually almost up another 1% at 1.5% at 154.47. This stock is on a tear since Berkshire Hathaway, Warren Buffett came out and said they're more heavily invested in Apple. That also impacted his statements, though, too, on transports. He said, you know what, he made a bet on railroads, and that hasn't been panning out as well as the bets in Facebook, Apple, Netflix, and Google. With that being said, you've seen that transports were under pressure. As a matter of fact, you saw yesterday transports were down. They actually broke their 50 and their 20-day moving averages. That means that the bears are starting to take control. Does it mean that Buffett's going to completely unwind his position in things like railroads? Not likely. Remember, he's a value investor. He likes his dividends. He likes cash. And with the fact that Apple has so much cash, I get it. It's a cash play, right? They also have an incredible brand, but with $256 billion in cash, you want to be part of that, especially if you like to get paid dividends. And so the stock moving up for Apple, but the transport's up 0.25%, so they're clawing back some of their losses from yesterday. But again, as I said, they're still below this 20 and 50-day moving average. A settlement below that today, again, means that the bears are starting to take a little bit of control here. The next level of support is going to come in at that 200-day level on the IYT, which is the transports ETF, and that's at 156. So we're going to watch this very closely. That's $8 away. Again, folks, we got to see how these transitions are going to play out. Another sector that was also down about 0.4% was finance. We haven't looked at bonds yet this morning, but bonds pulled off yesterday. In other words, their prices came down, yields are going up. We're seeing that 10-year yield get above that 230 mark, 235, challenging probably. Let's take a look today. But finance is up 7 cents, up 0.25%. But they've been struggling. They've been basically waffling around its 20 and 50-day moving average. Hasn't been a lot of momentum to the upside, despite the fact that we're starting to see yields move up. Tax reform potentially going to happen, especially if healthcare reform gets through the Senate rather quickly. Speaking of bonds and watching these markets, and again, why are you caring? Why does this matter? Well, the bottom line is that unless we start to get more participation by more names, in other words, outside of the large cap sector, and specifically large cap tech as the leadership, there's going to be some question marks on the continuation of this rally. Does it mean that the total market bull trend of the last 6 years comes into pressure? No. But does it mean that it could be challenged? Yes. And that's what we're trying to look for. We're not trying to time it. I want to make sure that we're tempering our emotions when we look at the markets. And then we think about our 401ks. We think about our IRAs. We think about these retirement style accounts, because other than your home, folks, that's the biggest asset that's going to get you from 65 years old until 90. And we're going to get you to 90, folks. You can clearly see that the 10-year yield now is challenging 2.4%. This has been a huge spike to the upside over the last basically 4 sessions as far as yields concerned. If bond yields start to continue to go up to the upside, that's not only a benefit for the overall markets, that should be a benefit for finance. That's why we should be seeing things like Bank of America, JP Morgan, which have made incredible moves to the upside, but the sector in general, finance, XLF, should be moving to the upside. Now today it's trading better, but it's challenging that 200-day and 50-day moving average, and it's been in a consolidation. This is not moving to the upside as you would think, with rates moving to the upside, specifically on the 10-year that we see this morning. Like I said, I take all of this with a grain of salt until I see either further economic data that is going to spur on more buying, or you start to see other participants, other names, other sectors, other than what has been most notable, large cap tech, driving to the upside. Until then, I'm going to take a tempered look at all the moves to the upside until we see those components actually coming into play. All right, folks, I want you to check out something. Go to the MarketStream.live, go to the homepage, scroll down to does your core investment portfolio fit you? Click here about learn more. And basically what I'm offering for everyone that watches these videos is the ability to just walk through a 5-minute survey. All you have to do is put your first name, last name, and email address. And basically, in less than 5 minutes, I'm going to give you your basically risk profile. In other words, how much risk do you personally think that you can take? Some people think that they're really aggressive and they can take it. They walk through this with me and they actually find out that not only are they more conservative than what they thought, but also their goals and ambitions for retirement, how they're positioned, or how much risk they think they should take on, doesn't fit their profile nor their goals and the amount of money that they're using to reach that goals as far as investments. And I will be able to give that to you, as well as a 6-month profile of potential profit and loss characteristics with a 95% probability of potential success. So, with that being said, take an opportunity to come in here and get that complete risk profile. Right here, all you have to do is do free portfolio risk analysis. Sorry, can't spit that one out. And in 5 minutes, you'll be able to answer the questions. I will then send you a full risk profile, also a suggested portfolio that you could look at that fits your risk profile, and also your goals, your objectives, your risk tolerances. Folks, you're not getting that in that time period, and then we'll sit down and talk more from your current advisor, nor from CNBC, Fox Business, or anywhere else. Only here at MarketStream.live can you get that through me at the Cusick Group. All right, folks, we will see you back on at 1:30 Eastern Time here at MarketStream.live. I'm going to be doing strategy now. We're going to check out some really cool strategies for your portfolio. We'll see you then.